Michelle Snyder, along with Kaltbaum Capital Management President Gary Kaltbaum. All right, guys, let's start today. We had three Federal Reserve officials speaking, right? I didn't listen to the speeches from a couple of them. I would expect they all said they're going to hold the line. So when you see this selling, to me, it's an indictment, not about inflation, but an indictment of the Federal Reserve and Jay Powell, Gary K., that he's just not going to be able to pull it off, that the Fed is no longer in control.
First, may I state for the record, I really hope I stay on Peter Marisi's good side going forward. Boy, look, you know what I've been saying about the Fed for a very, very long time, that every answer to every question, to every problem is to print more money, easier money, screwing every saver with 0% interest rates. And I thought there would be an ultimate outcome that would not end up well. Since Bernanke started the grand experiment, our debt has gone up $20 trillion. So since 08, 20 trillion of the, I think almost 30 trillion is between these people that have enabled all this. And I think we're getting close to the end game. Remember, I just told you recently, Charles, I thought we're in the late innings, if not the ninth inning. And I'm pretty darn sure at least the aggressive growth arena is done for now and in its own private bear market. And my big worry is not necessarily inflation. It's this hear no evil, speak no evil, see no evil attitude from Yellen and Powell that, oh, it's transitory, when then they never even predicted the rise in these prices. And by the way, these aren't just rises in prices, they're skyrocketing everything. They just have their butler buying them all their food and their chauffeur buying their gas, so they have no clue what's going on in the real world.
Yeah. You know, it's so funny, and I don't want to digress too much. Two guys running for mayor in New York City, they were asked how much it costs for a home in Brooklyn, and they both said about $80,000, $90,000 when the actual price is $900,000. So you're right. These elites are so disconnected, Michelle, from the real world. And in many ways, though, inflation in general is not always necessarily the worst thing for the market, particularly companies with pricing power. I know you're always out there looking for ways to make money. Are there any companies out there that maybe they're raising the prices but are able to put, to get consumers to pay it anyway and still maintain that volume?
Well, this is where commodities really become a very important player in the market right now, because what are commodities? They're raw materials that people must have, some more than other. We need to eat. We need to fuel our cars. We need to heat our homes, even though the warmer weather is coming. We need these basic goods. And so the companies that can pass those costs on to consumers are the companies that actually can afford to do that, because people are going to buy anyway. So you want to look at companies like Kinder Morgan, which is basically pipeline and infrastructure for energy, or General Mills, which actually sells food, which people need. These are the companies that I'd be looking at now, is what do we need and what will we pay up for, even if it hurts?
Gary, I know you're out of growth. We talked earlier in the week about that. What about other places? Energy obviously breaking out, crude breaking key resistance today. Financials are getting a bid. Are there places that you would still have exposure to?
Well, the big worry is it spreads to everything else. Until this week, the vaccine trade had been doing very well, economically sensitive. So I have to watch these very, very closely. Oil still looks okay, financials, but I sold my financials early this morning when they popped them up on higher rates. So I'm just very wary. Anybody, I think I told you last week, if anybody just Googles the words margin debt chart, and see it just skyrocket over the last 6 months. That is a lot of leverage that is coming off right now in the growth arena, an aggressive growth arena. I'm worried that starts spreading. So I'm just careful on most. But if you have to be in a place and you have to be invested, I agree. Right. Commodity types, economically sensitive, definitely look much better than growth at this point by miles.
Hey, less than 30 seconds, Michelle, though. I know you do look at tech a lot, and there's a difference between quality tech, names that have held up, and the ARK investment, Cathie Wood tech, those hot, exciting things that were up hundreds of % that are coming crashing down. Which areas are you leaning toward more now? Is it almost time to look at some of those high flyers that are coming down quickly as maybe buying opportunities?
I think so, especially since today's action technically is so interesting. Even though NASDAQ and the Qs have broken down under Tuesday's low, some of the stocks that ARK is in not only have bottomed, but today they're holding inside the range of yesterday. So Datadog being one, Fastly being another, 3D printing, or 3D solutions, I should say, being another. There's a few of them like that. And so what you want to do is find those companies, look at this inside range. If they hold tomorrow, if they take out Tuesday's high, I would take a chance on those because they've been beaten up. Those were the pandemic darlings.
Yeah, and by the way, Fastly just had a $22 million insider buy. 3D Systems just had a great earnings report. And folks, look at these names individually, but you got to be nimble, or you got to have you got to have nerves of steel right now. But I think almost all of them are buys if you're truly a long-term investor. Michelle, Gary, thank you both very much. Really appreciate it. Coming up, well, House Republicans